Hi everyone, we've got a special guest today. We've got Jen Pearson from Treasury Edge. So she has been really great to write us a blog post. And today we're just going to go through the blog post and her specialty. So she looks at Treasury and helps businesses address their financial risks, particularly if they don't have a Treasury function. So thank you so much for joining me today, Jen.
No problem.
If you just wanted to give us a quick little introduction of who you are, how you started this company, and why you decided to specialize in treasury.
Yeah, of course. Well, thank you for having me. So I have been in Treasury now for 10 years, across lots of different industries. And I decided to sort of start in Treasury, because when I started my career in finance, I worked in Procter& Gamble in an undergraduate scheme. And as part of the scheme, you worked in different functions in finance every year. So I got a good chance to experience sort of accounts and AP and lots of different stuff. And that's how I sort of decided to specialise in treasury. And sort of since then, I've never looked back. I've worked in the big manufacturing, professional services, financial services, fintech.
Amazing.
Started Treasury Edge in July last year, 2023. For exactly the reasons that you said, to try and help, scale up startups, all sorts of businesses to address their treasury risks. And yeah, hopefully I can bring some interesting content to your blog.
Amazing. Thank you so much. So the blog post was titled The Top Three Things to Look at with Risk Management for Startups and Scale Up. So what are those top three things?
So, number one, identify your risks and know what you're facing. Number two, take action to mitigate those risks. And number three, write it down.
Amazing. Sounds easy.
Yeah,
All
exactly.
right. So should we go through each of those top three in a little bit more detail?
Yeah, of course, let's do it. Um, so I guess on the first instance, when you're trying to identify your risks, there's the main financial risks that most businesses face. So I'll just sort of walk through those quickly.
Great.
So the first one is liquidity risk. So,
Mm-hmm.
the business needs to have enough cash to operate. You need to consider your working capital cycle and how long it takes for cash to cycle through the business.
Mm,
Plan for those worst case scenarios. COVID happened, all sorts of things happened. Do you have enough cash to bridge those gaps?
mm,
Um, and I guess in that same vein, we've got market risk. Right now your product might have huge demand. You might be booming, that might really fit the economic environment at the moment, but inflation might fall, people might get a bit more income. Are you still going to be as relevant? And these are the sort of things that you have to consider. There's also this credit risk. You might think that your big banks or your counterparties, they're stable, they're going to be there forever, but that's just not the case anymore. In the last 20 years, goodness, how many banks have collapsed? And we had
absolutely.
the big two last year with
Mm,
SVB, Credit Suisse. It's good to spend a bit of time thinking about where you are exposed to these things. And then the last few, there's op risk. It's not the most glamorous task, is it? But at any time, there's people in your business who you trust with making payments. They've got all this access. You have to think, do you have good controls in place? You don't want to be reactive to those sort of pitfalls, I guess. And then big one is FX risk. If you're selling internationally, if you've got a supply chain overseas, how exposed are you to the change in rates, and how much is that going to impact your bottom line? And should you really be sort of taking action to hedge those risks?
it's a lot of things to think about, and I can already think of plenty of times I've had to think about those things, particularly with that big SVB thing last year. So many startups. I had a lot of founders on the phone on that weekend. It was very stressful. And it certainly made us think now, at least two bank accounts per entity and all these sort of things. So, yeah, really important. All right, cool. So, number two.
Number two, yeah, take action. Well, you already said the first one, diversify your cash, don't put all your money in one pot. I mean, it doesn't just take the SVB collapse, it could be something that, everyone's left their bank tokens at home and suddenly you can't access your money. That happens all the time.
Yeah.
Mm.
Yes, it
And it's
does.
like, do you want to be exposed in that way?
Mm-hmm.
So there's been a lot of stories about people being debanked,
Mm-hmm.
recently, people not passing KYC and stuff like that. It's quite scary the impact that can have. So yeah, that's a super easy one. Always have at least two banks
Mm-hmm.
in all your different geographies if you can. Number two, review your systems access, make sure that you've got dual approvals, you're removing people when they leave the business, and just really simple things are always the most effective. And then the last one, it's quite short in the blog, but it's quite a chunky one. Hedge your risk if you do have risk. If you've got foreign exchange or interest rate risk, do some research, speak to your bank, and you can make it as simple or as complicated as you want to, really. But
Mm.
hedging's not about making money. It's about knowing exactly how much things are going to cost or how much
Mm-hmm.
you're going to get in. And I think you'll probably thank yourself in the long run for placing those hedges.
Mm.
I would say that there's so many good fintechs and platforms around FX now that,
Mm-hmm.
it can be really cheap, really simple, easy to use.
Mm-hmm.
And that's a good one. If you ever want any recommendations on that space, definitely just reach out to me or
Mm-hmm.
just a bit of Google, and there's absolutely loads of great experts who are willing to help on those
Mm-hmm.
hedging. So yeah, that's my point two.
Okay, great. Thanks so much for that. There's lots of takeaways there. I mean, hedging as well, that can be quite a tricky one as well. But I could see, I suppose, if you buying a huge amount of stock and you're having to pay and you know that that's happening, that's probably something to consider. Absolutely.
Mm,
Great. Thank you for that.
yeah.
And
Um,
number three.
mm, yeah, write it down. But I think this is the key one because these questions come up a lot, around risk management.
Mm,
And if you do have a really basic treasury policy, it just makes your decision-making process a lot simpler. So say you are going to put your cash with different banks or you're going to invest it in different deposit accounts, if you just have some rules in place as to these are the type of people we work with, these are the credit ratings we like to have,
mm,
this is our risk appetite, it might be high, it might be low.
mm-hmm,
It just gives the finance team a bit of a license to act and say, okay, well, if we've got a low appetite for risk, these are the providers we can use, and we're comfortable to place the money there and maybe earn a bit of interest. Or, it could be we're allowed to hedge up to 50% of our exposures. So, they can go away and do that, and they don't have to, keep asking the board, keep asking the CEO or
mm-hmm,
whoever else needs to sign stuff off to be able to do those things. And I've written a short summary of a structure of a policy in the document.
mm-hmm,
And I think sometimes the shorter the better,
mm.
really. Easy to understand, and then something that doesn't become a big task, really onerous to update. It's just a nice framework that you can use and refer to frequently. I think that's the aim.
Yeah, amazing. I mean, I know with every time I go into a new startup or scale up, having any policies and any documentation it's usually non-existent. So I can definitely tell that I'm going to be using number three over the next few weeks. Thank you so much for that, Jen. I really appreciate it. If you want to read that blog post, I'm going to put a link below. Otherwise, how else can people reach out to you?
So yeah, we have a website that's treasuryedge.co.uk, or you can use our email address, which is enquiries@treasuryedge.co.uk. But obviously just find me on LinkedIn and DM me.
Amazing. Thank you so much. I'll put those links below as well so you can click on those easily. But thank you so much, Jen. I really appreciate it.
Thanks, Alysha. See you soon.
Cheers. Bye.